Hello, on this video I will show you the 7 essential steps I take before I initiate a buy or sell trade, and these steps must be in accordance to my trading plan. One of the things that is common with traders that have been profitable for a long period of time. Without a trading plan, you will end up taking trades that do not have a high potential winning rate. And here is an advice for you: do not look at the chart if it's not your trading hours. You can be someone who only loves to trade the London session or the New York session. If that session hasn't opened yet, then don't open your chart, and also read your trading plan before you begin the 7 steps I'm about to highlight. The first step: check your economic calendar. Most traders tend to ignore the fundamental analysis, which is the underlying factor that moves the market. Trading without checking your economic calendar is not advisable because a major news might be released and the market would be so volatile during that period. It can wipe the money in your account, so always watch out for news like the interest rate decision, non-farm payroll, and inflation rate. And you can get this news on sites like dailyfx.com or forexfactory.com. Now I will go head over to dailyfx.com, and I have it here already. Dailyfx.com. This is one of the websites you can go to check your economic calendar. On the website, if you scroll to this place, you will see the calendar, and you will see the economic calendar and the central bank calendar. If you click the economic calendar, it will show you all the news that are due to be released for that day. Today is Monday, the 9th of May, and you can see here it says we have 1 high volatility news, 13 medium volatility news, and 57 low volatility news. Well, for me, I don't really focus on the medium and low volatility news. I only watch out for the high volatility news. Now that I've seen that I only have 1 high volatility news and it concerns Mexico and it's the inflation rate, uh, I'm good to go because I won't trade any pairs concerning Mexico. I will only trade the CHF and the JPY pairs, or the US dollar pairs, or the euro. The second step I take before I initiate a trade is to go to a high time frame. Now this is the 15 minutes time frame. What I'll do now is I'll go back to the weekly time frame. The reason why I first go to the high time frame is to identify my trend. On high time frames, I will know if the market is bullish or bearish, or the market is ranging. Another name for ranging is consolidation. That means the market is neither going upwards or going downwards. That means the market is going sideways, and that is not good for us traders. We make money if the market is going either upwards or downwards. And to know this, you have to identify if the market is making higher highs and higher lows for bullish market, or lower highs and lower lows for a bearish market. You make money two ways: either you buy or you sell a currency pair, and it's important to know the current trend of the market because it helps you decide on whose side you should be on, the bulls or the bears. Now this is the CHF JPY on the weekly time frame. Now looking at this chart, you will see that the market is bullish. I said the first step is to check your economic calendar. The second is go to a high time frame, which we've done. Now we are on the weekly. And then the third is to draw my trend lines. I will use these trend lines to identify bullish or bearish support and resistance. Trend lines are linear support and resistance drawn on the chart to identify the current trend of the market. If you use TradingView for your analysis, you head over to your tools, you can find your trend line tool here, and you can use that to draw your linear support and resistance. So I click this tool here, and to draw your a linear support and resistance, you only need a minimum of 2 peaks. You have this first peak, this second peak, third, fourth, fifth peak. This means that we have a legit bullish trend. Now I'll connect the peaks together. I'll connect this with this and this, this all the way to this place. Now I have my bullish resistance. You can see when price pushed below this level, it pushed high, it then pulled back, it then pushed higher to this same resistance. Now I'll click the same tool again and draw my linear support level. You discover that price also respected this support level and pulled back 1, 2, 3 times at this support level. Now we have drawn our linear support and resistance. This is our resistance and this is our support level. The fourth step is to identify my support and resistance, and this is where I get to look for my supply and demand zones where buyers and sellers overcome each other. It is at these zones that you will get to see where collective human behavior is at its peak. Now I have indicated your support and resistance level already. These are our resistance level. You can see that after price touched this bullish resistance, it dropped. After touching it again, it also dropped. After touching it, it also dropped. Now this is collective human behaviors. Sellers knew that if the price should touch this resistance, there is a high probability that the market will push down, and collectively they pushed CHF down to this level. I'll also look for my horizontal resistance, which is a resistance going sideways. Here I have a horizontal support and resistance, and also here. And you can see that when price came to this support level, it pushed higher to this resistance, it dropped, also touched this support level, then pushed up. I have another support and resistance here, and another support and resistance here. Recap: I said the first step is to check your economic calendar, which we've done already. The second, I said we'll go to our high time frames, and we've done that. We are now on the weekly time frame. And the third step is to identify my trend, which I've used the high time frame to identify that CHF is currently bullish. The fourth step, I said we will identify support and resistance level, which we've done. You can see I've indicated that this is my resistance, here is my resistance, here is a resistance, here resistance, and also our support level. Here is a support level, support level, support level, here also support level. You can see that whenever price reaches a support or resistance level, there's a high probability or high chance that it will reverse. The fifth step I take is to check if I have a confluence. Confluence is when you have two or more factors giving you a buy or sell signal. Factors like the combination of candlestick patterns and chart patterns, horizontal and linear support and resistance, Fibonacci or Elliott waves pattern. All these can be reliable signals for you to enter a trade. In order to find my confluence, I have to go back to smaller time frames compared to the time frame I am on right now. This is the weekly. I'll go back to the daily to see if I'll find a reliable setup. No, here I'll then go back to the 4-hour time frame. Now on the 4-hour time frame, this is my high. You can see that I have another resistance level here. Price pushed to this resistance, it dropped, later pushed higher at the resistance, but then it dropped below the zone. It then went back now as resistance. Now I told you that Confluence, you check for factors like the combination of candlestick, signals, and your chart patterns. Here I have the chart pattern, the head and shoulder pattern, and if I should use this tool to draw my head and shoulder, here I have, this is the left shoulder, and this will be the head, this will be my right shoulder, and then I have my head and shoulder chart pattern here. The head and shoulder chart pattern is a bearish reversal chart pattern. This indicates that the trend is about to go bearish. On the weekly time frame, the trend has been bullish for a while. So getting this head and shoulder chart pattern on the 4-hour time frame indicates that the trend here is about to go bearish. I can also scale down to the 1-hour time frame to get a clearer picture of what the market structure is. Here I can see that I have a bearish trend here, when after price touched this resistance, giving us our right shoulder, it dropped. If you also use your trend line here, now you have found a bearish resistance on the 1-hour time frame, and also there is this bearish support level here. Now we have ourselves a channel. When this bearish channel formed, it gave us our right shoulders. So I'm expecting a reversal, a breakout of this bearish channel. I have a support level here. Now this support level validates the pullback I'm expecting here, because after this bearish channel I'm expecting a pullback of this bearish move before a downward continuation. Remember, on our 4-hour time frame we have this bearish reversal chart pattern, so we are expecting price to continue going down, but meanwhile on our 1-hour time frame we are expecting it to pull back before dropping again. And remember, I also told you that I'll look out for Confluence, like the use of Fibonacci. This is where I can also use my Fibonacci. I can use this tool here. It's called the Fibonacci retracement tool. I can predict how far the pullback will be. So I'm expecting price to pull back from this level up here. So I can use the Fibonacci tool to predict how far this CHF will pull back to. So here is the tool. To draw that, I'll pick from the highest peak, this peak, down to this support level. Now the two major ratios that most forex traders use is the 50 ratio and 61.8 ratio. That means that my pullback will be at my 50 ratio, which is here, or 61.8 ratio. If you head over here, you will see the ratios. I explained more on how to use the Fibonacci retracement tool on my course. I'm expecting price to pull back either at this level or this level, but to be on the safer side, I prefer to use this level, because sometimes the market will not push above this 61 ratio. It will pull back at this 50 ratio. That is why it's safer to use this ratio compared to the 61.8 ratio. The market can push below this horizontal support level. The sixth thing I do is to calculate my entry and exit. To get my entry, I'll go to a small time frame like the 15-minute or the 30-minute chart to look for an entry. Sometimes I also use the 1-hour chart for my entry. I never use high time frames for entry because of two reasons. The first is to get better trade setups. The second is to reduce my stop loss distance so that I will have a better risk to reward ratio. And this is done so that I can increase the amount of contract I trade without risking more of my trading account. You can calculate your entry and exit using the long position tool. When I drag this and click here, you will have to remove this Fibonacci tool so that it will be clearer. Now this is the long position tool which you can use to calculate your entry and exit, and here is my 50 ratio that I've indicated with this arrow. I'll bring this downwards, and then my stop loss will be below the low of this candlestick reversal signal. The last step I take is to ask myself a question: are the odds in my favor? This consists of all the analysis I did from the first step down to the sixth step. The first step, I said I will check the economic calendar. Another question: is my trend and time frame analysis in line? Another way to know if the odds are in your favor is to ask yourself questions like: am I trading using reliable chart patterns or candlestick patterns? Another question is: am I about to take trade outside my trading hours? Now at the time of recording this video, it is 3:37 a.m. on 9th May, on Monday. The market is open already, but I don't trade this session. I usually trade from 12 p.m. in the afternoon to 5 p.m. in the evening. That is when I prefer to take my trades. So right now I will not take any trades because I do not trade this session. It is one of my trading plan. I do not trade outside my trading session. If I was analyzing this chart during a New York session, I will go for a buy trade. I have showed and explained the 7 essential steps I take before entering a trade. You might not be familiar with most of the things I mentioned. You can learn my ultimate strategy by enrolling on my course. Trust me, you won't have to rely on indicators or signal providers. Thanks for watching.